We say in Bitcoin that Bitcoin's on a need to know basis. So the people that get Bitcoin because they need to. If you're wet, freezing to death, and you walk past a fire, you're going to stop, throw a log on the fire, and you're going to dry your clothes because otherwise you're going to freeze to death. You have a need to know it. If, on the other hand, you're a rich man and you have, a massive ski chalet in Aspen with 10 people working for you and modern heating and air conditioning and a chef, and 3 cars and a helicopter in the back, and you've got a dinner party planned and you're walking past a little flickering fire, you're probably going to think I should put it out. I'm probably going to step on that fire because it looks like a threat to me. Microsoft is probably one of the 5 most successful companies in the world out of 50,000 publicly traded companies and 400 million private companies. They're not exactly the shivering, naked, starving dude running through the forest on the mountainside, right? They don't need it. It's quite optional for them, right? The people that discover Bitcoin are when you live in Nigeria and the bank or Lebanon and the bank freezes your assets and you're either going to starve to death and be bankrupt or you're going to have learned about Bitcoin. They have a need to know. If you live in a hyperinflating economy in Russia or in Venezuela or in Argentina, you're going to know. If you remember your family fleeing Nazi Germany in the 30s and losing everything, if that story's been told to you by your grandfather or your great-grandmother, right, then that resonates and you think, yeah, I think I'd like to be able to flee with my money, when the government goes bad on me. So I think that the message of this is shareholders in a well-run public company do whatever management tells them because they're not looking to pick a fight. And if you're an affluent investor in the first world, you're ingrained in your conventional wisdom and you don't have a need to know. It's not that you're not smart. I mean, the world's full of very charismatic and brilliant, hardworking, rich, powerful people. That is not the criteria for discovering a new technology. The analogy I give you here is Led Zeppelin. A bunch of teenagers and 20-somethings pick up electric guitars and they create Led Zeppelin and rock and roll. And there were probably some very genius classical musicians in Carnegie Hall around the same time. And if you ask the music critics what they thought, and the music professors what they thought, and the classical musicians what they thought, they would said, this will never amount to anything. This is bad for the society. Every generation gets a new set of technologies, right? You're a podcaster, but 60 years ago, it was Walter Cronkite and it was a different media thing. And 100 years before that, it was William Randolph Hearst and a different media thing. And so Bitcoin is an opportunity for the new generation. It is the people that embrace new technology. They're either the youth, the 20-something to 30-somethings at the beginning of their career that have everything to gain, nothing to lose, and no chance. By the way, no chance if they stick with conventional technology, right? It's like my advice to you is don't create symphonies. Mozart and Beethoven kind of did it. Piano. Listen to Chopin. Between Chopin and Beethoven or Mozart, they kind of did most of the stuff people want to hear, right? And so if you really want to make a name for yourself, make fame and fortune, you pick the new technology, right? And then the other group of people that embrace new technology are people in a war zone, right? People dismiss, remember World War I and we had horses and cavalry and oh, that doesn't work. And then people dismissed the Air Force. They court-martialed Billy Mitchell, I guess, Air power, that'll never mean anything. And then people stop dropping bombs on your head and you become a believer in air power. And so I think the real phrase from Max Planck, and he said it in the history of science and the study of science, he said, science advances one funeral at a time. It's like the old guard doesn't have a need to know, they're going to reject it. The younger generation, they do have a need to know. And then people that are under duress, that are fighting for their life, maybe you'll start the war, not believing in airplanes and believing that we should fight with horses, and swords, but you won't end the war with a general that believes that, right? You'll replace the first general with the next general. You'll scramble to embrace the new technology, and the side that embraces the new technology is going to win. The side that channels power most effectively is the winner. That's the story of history. But the other story of history is the people that got to where they are with a different technique, they become entrenched in that technique. That's part of their self-image. Look, you're the world's greatest piano player, and someone invents an electric guitar, and you're 70 years old, and they say, what do you think of the electric guitar? And you're like, it's a brutish instrument, for long-haired hippies.
What you guys have done is essentially replicate the financial markets with Bitcoin, which was, at least for a while, completely out of reach of institutional investors. So you could do calls, puts, bonds, like all kinds of financial instruments, but all with Bitcoin as the essential element. Is that correct?
We issue securities backed by Bitcoin, and the $500 trillion capital market I'm referring to, they have to buy securities. They need regulated options. They need regulated derivatives. They need regulated equity, or they need regulated fixed income securities. That means it has to come from a publicly traded, regulated company like MicroStrategy. And we are unique because we were the first company to build a large pool of Bitcoin as collateral. So if you actually accumulate $40 billion of Bitcoin, then you can issue these tranches of high performance equity or low risk fixed income instruments. And then all of the other traders, they can construct all of their various trades and all their derivatives based on those instruments, and they can do it on the NASDAQ or the CME or the New York Stock Exchange from their compliant institutions. And they could not buy Bitcoin, and they cannot trade on crypto exchanges. They can't trade on Deribit or Binance, and they can't trade offshore, and they can't hold the underlying commodity, either because it's illegal or because it's against their charter, and they promised their executives, their board of directors, and their limited partners and investors that they would only trade public company equity, options, fixed income, convertible bonds. So that's what they do. That's what they need in order to function. And what we do is we convert crypto capital, crude crypto capital, we convert it into refined traditional securities. And in the process, we strip away some of the volatility, we strip away some of the risk, we strip away some of the performance. And that stuff that we strip away, that they want stripped away, becomes leverage for our common stock, and we give it to the company and the common stock shareholders. That's how we outperform Bitcoin, and that's why we're more volatile than Bitcoin, because we took the volatility away from the fixed income investors that didn't want it, and we gave it to equity investors and derivative investors that need it. And we're just that gateway sitting in the middle, managing that.
Okay, so many people speculated that when the spot ETF was granted for Bitcoin, that MicroStrategy would not be relevant anymore, but that didn't come to pass. Why not?
Because the ETFs are SEC 40 companies. That makes them investment trusts. And so a trust company is a special vehicle. It's constructed to own an asset and hold it in trust and not do anything other than hold it. So if what you wanted to do was buy a bar of gold, you might want to buy GLD or IAU. Those are gold trusts. And they're allowed to take your money and they buy gold. And then the asset's dead money. It's a dead asset, just, well, let's say a stationary asset in custody, and you have the shares. And if you were to sell your shares or redeem them, they have to then sell the gold and give you your cash back. So think of them as like overnight depository banks. I could have $100 billion in that bank. It's overnight deposits. I invest it in gold or soybeans or oil. And then when you want to redeem, I sell the soybeans and the oil and the gold. I give you back your money. And I charge you 20 basis points fee every year. MicroStrategy is an operating company. We're regulated by the SEC 33 Act. An operating company can raise permanent capital. We can actually sell $1 billion of equity to take risk. And so if I sell $1 billion of equity and I buy $1 billion of Bitcoin, it's not an overnight deposit, it's a permanent investment. So you've got the equity forever and I've got the Bitcoin forever. You don't have a redemption right. You can't just show up and say, here, take my MicroStrategy shares back and give me cash. No, it's permanent equity and I have the Bitcoin. So we don't have $40 billion of overnight deposits. I'm not a bank with $40 billion of somebody else's money that I got to give back, making 10 basis points a year. I'm a guy with $40 billion. It's mine. Okay, now if I'm a company or I'm an entity with $40 billion, I can go and I can borrow $3 billion from the convertible bond market for 5 years and agree to pay them 0% interest. But I have to pay back the $3 billion in 5 years in either equity or in cash. Okay, that's a risk they take. They give me the $3 billion. It's an obligation I take, and then I take the $3 billion. By the way, if I took the $3 billion and I bet it on black in a casino and I lost it, I took a stupid risk. I lost your money. The equity holders are hurting. I'm going to have to dilute the equity or come up with the $3 billion some other way, right? So I can do something irresponsible. You are trusting the management team of an operating company to not do stupid things. But let's say I take the $3 billion and I buy Bitcoin with it. And let's say you're an equity investor and you just gave me your money and you like Bitcoin. Well, what I just did was I just borrowed billions of dollars for free to buy the thing that you like. And if you think Bitcoin is going down, you're not owning my stock for a minute. You're not long my stock. The only people that are long my stock are people thinking Bitcoin is going up. So if you have any forecast for Bitcoin, whether you think it's going up 3%, 5%, 50%, 100%, all circumstances, it's smart for the company to borrow money for free and buy Bitcoin, right? It just doubles